You know, it's interesting because a lot of folks have been brought up in the term buy term insurance and invest the difference in a 401k, which is related to the stock market, right? But there is folks out there that just have no interest in the stock market. They love alternative investments. They love real estate. Today we're going to talk about non-stock market retirement options. We're also going to tie that into how to invest money into life insurance. So when we think about life insurance, one typically has to contemplate their own death, visualizing what the world is like without them. So from that perspective, it's always like a recoil. However, if there's a proper education and understanding how life insurance truly works, and there's a lot of different products out there, but I'm going to just zero in on one for now, and that's how to utilize whole life insurance both as a short-term, long-term strategy, and being able to use that as a turbocharger and a Swiss Army knife on creating a solid retirement plan. So by definition, the word investment and life insurance are really not in the same sentence. What I'm saying is the thought process is, how do you provide payments into a cash value life insurance policy? What does that look like? How do you figure out how much you could put in there, especially if you don't want to do the stock market? So if you're against IRAs or 401ks or pension plans or creating your own pension or Roth IRAs or Roth 401ks or any kind of money that would go into the market, the thought process would be to take those same dollars that you would put into the market and now run it through a cash value life insurance plan, in which, from a whole life perspective, there's 5, 6, maybe even 7 different whole life products that are out there today. If you want to take a long-term viewpoint, not touch the money at all, if you're 30, 40, or 50, and then begin to take distributions out of your life insurance policy when you're after 65, which is typically the normal retirement age, there's one approach. The other approach would be to massively accelerate your policy because you may be an entrepreneur. So you may want to put as much money as you can without creating a taxable event, and there's a calculation that the insurance carriers will provide for you so you don't make that mistake. But as you begin to fund these life insurance policies with accelerated dollars, you may say, hey, look, I love buying real estate, and be able to put money in the policy and then borrow from the policy and purchase real estate. Now, these real estate purchases can also be part of your retirement plan. We're not talking about using life insurance to buy a piece of property and sell it 30 days later. This is more for the long-term person that's out there today that wants to use this money for the retirement strategy. We also want to understand that, hey, how do I take money out of a policy? Can I take it all out at once? Is it smart to take it all out at once when I'm 65? And the way it works structurally is you begin to take distributions up to the basis. The basis is how much money you put into the policy, right? Once it breaks basis, to maintain that tax-free status, you'll borrow from the policy, and that'll allow you to take it out without paying any taxes. Why is that important? Because at the end of the day, when you do proper planning, whether you're using the market or you just want to use outside of the stock market strategies, it's always important to figure out not what the taxes are going to be in the future, but that there's going to be taxes in the future. So it's really about being honest with yourself, being educated with yourself, speaking to the right people, understanding exactly what you need to do from a situational standpoint, not only today, but as life changes. As you begin to make more and more money when you're going from your 20s to your 30s, 30s to your 40s, 40s to your 50s, can you put more money into those policies or that policy? And the answer is yes. Once again, you want to make sure that you don't go through the MEC limit, which if that happens, it becomes taxable. So there's an awareness factor, right? There's also, as you begin to evolve, if you're like really crushing it in all different areas, there's premium finance strategies when it comes to these policies. And what is that? Well, a premium finance strategy, once again, this is non-stock market related. It's for retirement. The bank pays the premium while you're deploying the rest of your money and time into your business. And then after a certain amount of time, the policy pays back the bank and you're left with net cash value and a fully paid up death benefit that can also give you income in retirement. So these different strategies, methodologies, mindsets when you begin to utilize life insurance as a turbocharger, begin to use the bank as the premium payer for your policies, purchase as much real estate along the way. And oh, by the way, you may want to finance your own debt. You may, instead of going to Ford or Honda and pay them every month, use your life insurance to buy the car and pay your policy back on a monthly basis. If you're a farmer, you may want to do the same thing with farming equipment. If you're a dentist, you may want to do the same thing with dental equipment. It's all about a mindset on how to get multiple use of each and every dollar. Once again, these strategies that I just talked about are not directly affected by the stock market. If you go premium finance, you are subjected to interest rates. However, if you buy the proper kind of whole life policy, there is a 12 to 24 month lag on the dividends that are tied to those interest rates. Once again, you should make sure all the professionals are on the same page. So every decision you make, the right hand is speaking to the left hand. It's based on logic, math, and science, not emotional timidity, not a gut level hunch. And don't do a plan just because Joey next door is doing it. Make sure any plan you do, it's because everybody is on the same page to what your core values are, to what your investment philosophy is. And remember, they're not paying you, you're paying them. Every single day we're pushing out daily content. Every single day we're bringing it. If you can, please, if you like this, hit the subscribe button. If you have any comments or questions below, feel free to add. One of the team members will get back to you, and I can't thank you enough for watching us.